Digital assets. We're all talking about them. We all talk about how to make them accessible. And probably one word that we also need to shed some light on is bankable. And that's why I'm here, not only with Mimi the dog, who is supporting us along the way, but also with Lucas, who actually knows how to make digital assets bankable. Lucas, how do we do that and why it's important?
All right. Well, thank you so much, first of all, for having me and giving me the opportunity to speak about it. And yes, this is a well-known problem that we have where the traditional financial market and the crypto market is colliding, if you will. And it's quite challenging to make structured financial products on digital assets. And we have figured out a way on how to do it.
And what's the challenge behind it? Can you share a little bit of the process behind that? Why are not banks doing that? Why are you actually in this game? What makes it so difficult when we're talking about digital assets?
Sure. So I will start there. Traditionally, and maybe now let's take a step back and look at what has happened in the past and what banks have done in the past through securitization, which is the tool on how we actually make these digital assets bankable. As a bank, you're of course regulated. And if you securitize as a bank, per default or per design, I should say, the underlying assets, whatever you may have, become part of the bank's balance sheet. Mm-hmm. And then the bank issues the structured financial product. And now if you look at crypto, that comes with two problems. The first one is that the bank cannot just put crypto on their balance sheet because as you can imagine, operationally or technically, it's challenging with the wallets. They're all working on solutions, but
we know the issues there. It's a tricky world.
It's not that easy. And the second thing is that in Switzerland, for instance, we have a ruling from FINMA that says if you do put crypto on your balance sheet, then you have to have 800% Eigenmittelhinterlegung, as they say, or reserve capital to ensure that as it's such a fluctuating asset.
So you need technically a lot of cash or like a lot of liquidity to actually have crypto on your balance sheet, and probably also we know how the markets are. A lot of companies are not too comfortable with that, right? Especially when you're in a regulated environment.
Exactly, and this brings me now to exactly the point that we can offer to our clients, like banks and asset managers, is that we incorporate an off-balance sheet issuance vehicle, as we call it. And out of that issuance vehicle, you can look at the balance sheet from that issuance vehicle now. Yeah. It's orphanated, it's off balance, and on the active side, you can park now any asset from digital to anything, virtually any asset. And on the passive side, opposite, we as GENTWO, as a service provider, we actually structure the term sheet, and then that position on the balance sheet, we securitize with, again, a regulated bank, which is then the payment agent to the certificate.
And if I now want to get access basically to one of those bankable products, how does it work for me as an investor or someone interested in digital assets that want to go the way via the bank? How does it normally work?
Yeah, so from an asset management perspective, if you're looking to take your strategy that you're already running, let's say in crypto or the simplest form of a certificate, which would be a tracker certificate, for instance, on Bitcoin, you would, in this case, just approach us and tell us what it is that you want to do. And you can look at us like a wrapping company that then takes your strategy and wraps it in a Swiss ISIN. And maybe I should explain quickly what an ISIN is. Yeah. I mean, an ISIN is an International Securities Identification Number. So it's kind of like an IBAN or like phone numbers, but this is for securities, and every country has their own. And it just is a unique identifier of a certain security that gets issued by banks.
Yeah, and then it's available.
Then it's available through the banking system. Yeah. And maybe one thing I can add here, I mean, I like this example a lot. So tokenization, which we all know is a wrapper as well, a wrapper of anything. You can wrap anything in a token. Yeah. What you end up with as an end product is a token. A token can be bought by people that have wallets, so on and so forth, can be transacted via the blockchain. We all know that. And what we do is essentially the same thing. We are the wrapping company that provides those wrappers, but we are transacting within the banking system, if you will. So any business idea we can wrap in a Swiss ISIN and make it bankable.
And out of curiosity, so what's normally in there? You mentioned already Bitcoin, probably that was the most obvious one. what is the market demanding there? So where do you see that people want to make digital assets bankable? What are things that
Yeah,
are
there are
coming up?
so many facets that we can do. So maybe talking about the products that we can do. So the first form I already mentioned is a tracker certificate. That's just shadowing the price of an underlying asset. The second one would be an AMC, an actively managed certificate, which is fund-like in its economic performance or outcome. And the third one would be a credit-linked note. So it's a debt instrument. An actively managed certificate, this is what we see the most. That could be anywhere from any crypto portfolio that any trader or asset manager can think of, or it can be even, algorithmic trading, high frequency trading, arbitrage. We have seen all these strategies that we then just take and turn bankable. Maybe one thing to mention as well is that we give our clients the freedom to choose the counterparties. So our GENTWO framework is set up in a way where it's completely modular. So you can choose the payment agent, so essentially the ISIN that you want. And then you can also choose the custodian broker, which you want to use to trade the digital assets on. So you just let us know, and then we open an account in the name of the issuance vehicle. And then the asset manager, or what we refer to as the product manager in our framework, they get the power of attorney and they can trade as much as they want.
So you make everything possible that we need basically to make it bankable.
Exactly. It's a big stepping stone for crypto, and this is also the motivation why we started about 3 years ago, because it's for the first time ever that an asset class like crypto was retail first, if you will. It's easy for you and me to open a wallet and to buy Bitcoin, but it's extremely hard for institutionals. And that was never the case before. It was always the other way around, where the institutionals were, doing cool things. And then at some point they gave retail the ability to also join, and now it's the other way around. So I look at GENTWO Digital as the stepping stone for digital assets and people that are, coming up with cool ideas in the digital asset space, also investment buys, to wrap them up and make them accessible.
That's a really interesting point that you're touching up on here. So you started in 2018, which was still like the end or some kind of like the crypto winter, right? So at least the ones that have been in there knew that from a crypto terms, that was not the most beautiful time we ever had, right? Now we're in late 2021. It seems like the world has changed. We see a lot of like this institutional headlines where the markets are reacting in some way or the other. So how do you see this from like what's happening from the market perspective? So is this more headlines, or is there like really coming in something where a lot of institutions are saying like this thing, like this whole crypto digital asset thing is something that we're interested in? Or do you think it's still, something that we smile at?
Yeah, so, okay, you're exactly right. 2018 wasn't an easy year to get started, but it taught us a lot of things. And it was also good to get all the crappy projects out of the way. So it was survival of the fittest or the best protocol. However you want to call it, it was a good thing. Only quality projects survived. And what I remember dearly is, I've been to all these crypto conferences and I talked to all these bank managers, and they always said, well, I don't believe in digital assets, but so they would always tell me this first, going into any meetings, like, I don't believe in this Bitcoin stuff, but I will listen to what you have to say. And then in the end of the meeting, they were like, okay, well, now that we have a vehicle or like a form where we can actually wrap it up in a way where they can also manage it properly. They can also, charge their management fee and performance fee, which is, I think, important because that motivates good people to also spend the time to, and they should get compensated for it, right? And in the end of the meetings, they were like, okay, well, we still don't believe in it, but let's take 1% of our assets under management and put it towards digital assets, because we can afford to lose 1%, but we cannot afford to miss out on this. Yeah. And I think this is the exact right mindset to tackle this new asset class.
And you would say that this is getting more and more now. And that's probably an interesting way also to look at this mass adoption part, right? And how this community is evolving when we are looking at the crypto market, right? And the market cap in general. And then you just mentioned 1% of asset under management. Probably most banks have more than that, right? Just under management. So do you think there will be like a storm onto the crypto markets coming from this institutional side as well, where especially things like you're doing, right, with making it bankable, will play a major role in shaping the future landscape of crypto finance?
I think so, yeah, because the more money that's getting printed, I mean, the monetary system as a whole, I mean, can be looked at as something quite, intransparent. And I mean, I don't want to get into the details of that, but everybody interested in crypto, I think, already knows that. And the more money that's getting printed, the more interesting alternative asset classes become. And crypto is certainly something that, I mean, historically, everything, if something goes south, everything went back to gold and silver, right? That was the only alternative. Now, for the first time ever, there's a second alternative, which is digital assets. And they are just there, like the one Bitcoin will always be a Bitcoin or any other coin. I mean, it will always be there. And the more money that's getting printed and all fiat denominated assets, I think they will, depreciate slowly but surely. And inflation will play for sure a role in our economy in the future. So therefore, I think it's really interesting. Institutionals are getting the hang of it. They're understanding it. And also the most important people have spoken positively about it. And I think we're heading in this direction where it's becoming more and more mainstream.
And that's a perfect sentence for our second video of the series, because in the next video, we are going to talk exactly about that. Where are we heading into the future exactly, and what does it mean? Not only for bankable assets, but also for digital assets in general. So stay tuned.